Testing, testing. Hey, can everyone hear me? Right, just making sure everyone can. All right, nice. Hey, Diana. Hey, Matt. We got Frances. We got Joanna. Nice to see you. Right, Maps, Ellen, Desiree. Nice to see you. Good to see you back. Hope you enjoy your holiday. Right, I need a holiday. All right, Vincent. Nice to see you. Moses, Bob, Ajay, Marugesh, Nal. Nice to see you guys. Moses, I'm doing fine. Thanks for asking. Right, I think I need to tweak my thing here a bit. Okay, yeah, cool. Um, yeah, Fabio, no worries, right? Actually, the webinars are uploaded. They just the last few webinars, which were really great webinars, especially a swing trading one, right, has been uploaded. Just that we're waiting for the thumbnails. I might just update the thumbnails so that it can be pushed out, right, for you guys to get access to it. Kanemba, nice to see you. Now, nice to see you too. Hey, Robin, nice to see you tune in, right? Desiree, you should never forget how to trade, right? Trading should be second nature. Yeah. Hey, Luca, nice to see you. Peter, nice to see you here again. Right. All right. Yeah, swing trade one. Swing trade one was a great one, right? I introduced a new checklist for everyone to take a look at, right? And I think it's very useful in helping you identify rather filter setups. Paul, nice to see you. Lulian, Kelvin, nice to see you. Jamilu, nice to see you. Tune in, man. Right, everyone's here nice and early. We got a really good turnout today. Right, today's session is well, today's session actually, I'm on the wrong slide. Right, today's session is on how to trade gold. Right, and hey Vanda, hey Mafon, nice to see you guys. Or is it Arkibong? Right, yeah, today's session is on how to trade gold. It is probably, while I was preparing for it, it's probably one of the toughest ones I've I prepared. It's not easy, right? Because there's so many different things that move gold, right? And if you I like to liken it to tug of war. Imagine it's like tug of war, right? So maybe we have like tug of war, you have one guy here, right? You have one guy here and you got one team here, right? So tug of war, but right, most currencies, most forms of analysis is pretty easy. You got tug of war, and you're just pulling left and right. But the problem with gold is that you have another guy over here, pulling it in this direction, and you have another guy over here pulling it in this direction, right? And maybe you got like here and you got here, and you suddenly have everyone pulling in all the different directions, right? So it's not as clear as other asset classes where what causes it to rise, what causes it to fall. In gold, there are many different things that you kind of need to constantly be on the watch out for, just to know, especially the fundamentals, man. The fundamentals are crazy, right? Especially like maybe the Fed interest rate, right? Recessionary fears, got economic uncertainty, right? Even oil prices increasing. Oil prices increases, it leads to inflation. No, the cost of goods increasing, right? Which leads to inflation. And because of that, the Fed jumps in. They decide to increase the interest rates to fight inflation, and that causes people to spend less money. And when people spend less money, there are recessionary fears, and from that, the gold prices go up. Right? It's so many things that move gold. It's a bit crazy, right? All right, wait, okay, I can see some questions come through. Can't see the screen, only the webcam. Man, are you okay? Can you guys see the screen now? I think for some reason the screen sharing stopped for a while. All right, I thought you guys just wanted to see me. It was gonna be just a one-way chatting session today. Why do you guys want to see the chart? Sorry. I thought it was just gonna be us, right? Just sit down and chat. Yes, I was drawing something. So yeah, that's just yeah, I can see it. Yeah, I was drawing something, right? I was drawing this little multi tug of war, right? Multi tug of war with my stick people, right? Very well drawn stick people, as you can see. Yeah, but the thing with gold is that it's not just like one tug of war over here, right? You got another tug of war over here, you got another tug of war. So you got many people pulling in different directions, and it's not that clear. That's why when people do an analysis on gold and they see what what is correlated with gold, uh, gold is almost correlated with nothing, right? Maybe with the dollar index, right? It has a decent enough correlation with the dollar index, particularly because the price of gold is denominated by the USD, but by itself is not that great either, right? So there are a lot of different things that you need to watch out for when you're trading gold. So I can already see a questions that come in from Rocky saying, which time frame is it better to trade for gold? I'll be showing you in a bit, right? It's a little bit tricky question there because the time frame we should trade also depends on the personally for me, I'm always a fan of I'm on extremes. I either take swing trades or I take scalping trades. I never ever like I don't exist in between, right? So goal is I'll show you ways you can trade gold from a technical perspective and fundamental perspective in a bit. All right, guys. Now let's begin today's session. All right, for the sake of the new people here, may I know who is here for the first time, right? Is anyone here for the first time? So I will know to direct you to different to some of the different webinars, right? Which might give you a better idea of some of the terminologies that we refer to, right? And if you're here for the first time, let me know which country you're from, right? We got Frances. We got Frances. Welcome, Philip. Welcome, Akinyemi. Welcome, right? All right. We got quite a number of you guys, right? Malenga, Fabian, Steve, Samuel, Graham, Margaret, Alfred. All right. Imat, you're not first time here. Nice try. Right. Okay. Wow. We've got quite a number of people from Nigeria, Graham, South Africa, Indonesia, Mexico, nice. Saudi Arabia, Jamaica, South Africa. Actually, quite a number of you guys from South Africa. You can create like a South African trading group, right? We got Bulgaria, Mary Rose. First time. Where are you from, Mary Rose? Right. I like to guess the names. No, I like to guess the countries. For those of you guys who are here for first time, maybe you can guess which country I'm from, right? Not many people get it right. Not many people get it right. Yeah. Okay, I got Nigerian, UK, got South Africa, Portugal, London, India, Sydney, London. All right, London must be pretty early there, right? Sydney must be pretty late. Lagos, right? Oh, okay. Shaden locked in from London here. Oh, Greece, nice. Guys from Greece. You got India, right? Rwanda. Where's Rwanda? Yeah, I don't know where's Rwanda. Sorry, my geography is terrible. Oh God, a couple of you guys from Germany. Germany, nice, nice. Serbia, right? Netherlands, nice, nice. I love Netherlands, right? Nigeria. Okay, cool. Oh, Malaysia. All right, cool. Philippines, nice, nice. Okay. Wow, so many. There was one country which I didn't know where I was from. Oh, Slovakia. Hey, Utam, nice to see you, man. Utam, nice to see you. Oh, Rwanda is in Africa. Oh, okay, okay, my bad, my bad. I was wondering where it was from. Uh, how the Lambo Insta guys have more views? Which ones are they, Fabio? Maybe you can let me know. Who are the Lambo Insta guys? All right. Hey, Muhit, nice to see you from London. Oh, it's 10:30 in London. All right. I look like I'm from the Philippines. Oh, nice try, guys. Yeah, because I'm kind of dark skinned, right? But no, I'm from Singapore, right? I think some of you guys, if you ever came to Singapore before, very very tiny island, right? You might seen some of the F1 races in Singapore, right? So yeah, I'm from Singapore, right? So I can speak Chinese too, yeah, or rather, I can try to speak Chinese. uh, right? Yeah, great. We're looking forward to make some money. Now, many of you guys are here for the first time, so let me do a crash course for you guys, all right? Now, disclaimer, I don't sound like a Singaporean. Yeah, I don't, because I need to tune off my Singaporean accent, right? When I'm doing these webinars. Otherwise, no one will understand me. Yeah, that's right, KK. All right, yeah, so disclaimer, guys. Remember, everything in this webinar is educational in nature, so nothing should be construed as investment or trading advice. Please do your own little due diligence before you guys trade, okay? Now, Fabian, Fabian, which country are you from, right? How will you know what a Singaporean sounds like? I'm actually pretty curious there, right? Not many people know how a Singaporean sounds like. All right. Oh, Fairbanks from Indonesia. Ah, no wonder. Batam. Oh, okay, okay. I see, I see. No wonder. Then you see a lot of Singaporeans there. Yeah, that's right. Okay. Now, guys, and you should be seeing more of them now. Let's rock and roll. All right. Introducing your host for today. For most of you guys to think that who is this guy, in this chill shirt, talking to us, right? Good morning, Leandro. Nice to see you tune in just in time, right? Yeah, for those of you guys who are here for the first time, hey Hans, hey Angela, right? My name is Desmond Leong. This is a much more vibrant version of myself before I became a dad 6 weeks ago, right? So I think you started seeing my eye bags and stuff, right? But yeah, I run the award-winning research firm Everest Fortune Group and also the Forex Army, right? So a finalist for 2019, 2020, 2021 for best FX and best equity research. So we really know our trading, we're good stuff, right? And we usually work with the institutions, but we have a special partnership with IC Markets where we are bringing you guys the good stuff, the juicy stuff, the stuff that take your trading to a next level, right? And we have many people who have shared their testimonials, right? Going from 40 to 60% hit rate, 60 to 80% hit rate, unprofitable to profitable traders, right? It's nice to see, we've been on a 1.5 years or maybe close to more than 1.5 years journey every week doing webinars with you guys, and I've seen you guys improve your trading so much more, and it's just music to my ears, right? I just love to see it, right? If you want to find me on Instagram, nothing much, just me, my cat, my wife, and my kid. Yeah, my kid, and I have a kid now, right? You can find me on Comfy Desmond, right? Thank you very much, Angela, right? Yeah, so let's begin today's session. And if you want to find some of the tools that we have, you can head over to Forex Army, right? I built some, especially a Trade Manager EA there, which is pretty useful if you're trading on MT4. Okay, now, before we begin, many of you guys are asking about this VIP room. Okay, I'm just going to share a quick link with you guys. You can actually go to this link. I'm going to go to the chat. I'm going to send it over here. This is a link that you can go to if you want to sign up for the IC VIP room, right? It's a free room. As long as you have an IC Markets account, you get access to it. Minimum of $1,000, right? Will get you access to the IC Markets. You have more than 600 people in here, right? It's nice that you can come in. You can chit chat with the rest of us. You can see Desri's back. I have a new reaction, right? It's called my diamond hands reaction. If you see me reacting to diamond hands, I just added it in, right? Adding new funky little reactions in there, right? But yeah, so it's a nice little chat room for us to be in. But more importantly, right? More importantly, it actually allows you. Oh yeah, shit! I have over 100 notifications. I'm gonna clear this. I'm gonna mark all as red, okay? Because I have way too many notifications, right? And somehow I still have 9 notifications after marking all as red. But how you can practice your analysis in here, right? How you can practice your analysis in here is you can come in here and let's just say you're wondering if this is overlap resistance. You can come in and say, hey Desmond, okay, yeah, hey Desmond, right? Is this an overlap resistance? What exactly are you referring to? You can highlight your text over here. You can select this button called link object to text, and then you can select whatever you just drew. So if you just drew this, you can click on it and you can see it lights up, right? So when you confirm and you send the message through, if I'm seeing it for the first time, I'm going to see, hey Desmond, is this an overlap resistance? When I hover my mouse over it, it will light up on the chart. Then I can have a little dedicated discussion with you in there, and we can discuss about this overlap resistance, right? But it's a very, very structured way that we can discuss about all the different markets we have by the side. Really nice place just to chill and talk about gold, silver, crude oil. We got Cass, we got Joanne, we got Melanie, we got a couple of new people coming in, just sharing their ideas, right? So it's a great place for you to learn how to be a better trader. Mafon, right? It's okay. I will pass the message on to them. It's a little bit tricky. Yeah, but I'll pass the message on to them. All right. Kurban, yeah, you can just come here, right? So when you come here, when you register, the first thing that you need to do really simply is you need to just give it a second. You need to click on this thing called request access. Okay. It doesn't load now because I already have access, but you can click on it and actually allows you to send in a request, attach a screenshot of your live IC Markets account with a minimum of $1,000 in it, and I will approve it so that you get access into here. Okay. Now, a few other things I want to talk to you about really quickly. you need to go to this playlist. Okay, what's this weekly market commentary? All right, cool. Yeah, you need to go to this playlist over here, and it is the IC Markets webinars, right? This is the playlist you want to go to. I just uploaded advanced swing trading strategies, right? Looks like it's up, right? I was just trying to play around with it earlier, right? So Desri, if it's there, yeah, you can just my brain just stopped for a while, right? Yeah, Desri, you can go and check it out. It's an advanced swing trading strategy, right? If I'm not wrong, yeah, it's there we go. It's all there for you to kind of take a look at. All right. Now let me go back there, right? This is the playlist where you want to go. You just watch all the different webinars. It's quite a number of them. We got over 58. By the time uploading everything, it might be 60 or even 70, right? Yeah, 60 or over 70 different webinars. Just go through all of them. It's going to take a while. Okay, guys, it's going to take a while, but by the end of it, you'll be a better trader. Trust me. It is the gold playlist. That's right, Fabio. Yeah, it is the best playlist you can ever find. All right, and I'm not being biased myself. It's a great playlist for you to be to really go through stuff. Okay. Now Tammy, I know you want a personal mentor, but yeah, just head over to here, right? And yeah, head over to here, right? I just sent you the link, and yeah, there's a webinar playlist, the IC Markets webinar playlist you can go at, and of course you can go and Kurban, you don't send that email to VIP support, right? You just, I've told you, just go to this link over here, right? I've just sent it to everyone. Go to that link and register for a new account. Okay, once you register for a new account, you don't need as long as you have an IC Markets account, you get access into, you need to take a screenshot of your account, upload it, and I will approve your access. Okay. Now, I hope that answers your questions. Okay. Yamino is saying, okay, there's divergence, correlation. Yep, there are a couple more webinars. I have them uploaded. I just haven't put the pictures in there yet. So give me a second, okay, Yamilu. Right now, guys, let's begin. Let's begin today's session. Let's rock and roll. Okay. I don't want us to digress too much. No, it's not Discord. It's our own platform that we built. Okay, so the agenda for today. Let me just take a quick sip of water. Otherwise, at the rate we're talking, I'm gonna lose my voice. Right? The agenda for today on how to trade gold. Okay, we're gonna talk about what moves gold. Okay, we're gonna understand the fundamentals. We're gonna talk about how it strongly correlates with other instruments, different instruments. I'm gonna teach you about how you can combine it into a trading strategy, long term and short term. Okay, long term and short term. It's a little bit more advanced. And remember, the thing about gold is that it is not as straightforward, right? It's not as straightforward even as oil, right? Because so many things that move gold. But I'm just going to give you hopefully enough information for you that when you look at the news, look at what's happening, right? You more or less know how it might affect the gold prices. Okay. Now, guys, let's go down to here. And so, what moves gold? Right, there are a few things that I want to let you know, right? And that is that if you usually, right, if you look at this flag here, this is the US flag, right? Strong US economic data, tends to cause gold to go down. What I mean by that, right? So the things that you want to look out for, right? The things that you want to look out for. Let me see if I can draw it here for you guys. Well, I've got so many things flying around, right? Just me, I need to move this down here, move this here, move this here. Are you guys able to, so I need to see the audience because I'm moving stuff around, right? Okay, so the stuff that you want to take note of, right? Stuff that you want to take note of, like stuff like your jobs report, right? So broadly, when we're talking about, who is this, what makes this guy over here very strong, right? What makes the US strong? You're gonna look at stuff. God, my guys, guess what? My mouse just ran out of battery at the freaking best time ever. Talk about Jones theory, right? Freaking crazy timing. How amazing is this, right? I was just thinking, what the odds that it's gonna freaking happen, and it really happened. Guys, if you know what Jones theory, no, not Jones, like Murphy's law. Murphy's law is what can go wrong will go wrong, and in the lifetime of a mouse, the number of times that the battery actually runs out is like maybe once every 2 or 3 months, and it picks the perfect time for it to just run out of battery. It's crazy. Okay, Rotislav, let me check it out, right? And let me check it out and see what's the reason for that. Okay, now my mouse is yeah, I'm seriously organized to have spare batteries, just that my batteries are not working. So be right back. Let me just go get my more batteries. How many batteries? Webinar. And yes, I am still prepared. Oh, Ross. Rotislav. Did I pronounce your name wrongly? Rotislav. My bad. Right. Okay, my mouse is working back again. Ross. Yeah, I call it just Ross, right? Yeah. Okay, cool. Now, what was I drawing? This strong guy over here, right? This strong guy. Um, what causes it to go up is this thing. It needs to be clear, right? It needs to be quantifiable, and that's called economic data. Okay, you got Targaryen edition. Tangerine. Did I say Targaryen? I was thinking Game of Thrones. Sorry, Ross. I was like, okay, because it would make sense that Secret Lab does have a take Targaryen, like Game of Thrones, like collab or something. But okay, economic data is the thing that you're looking at now. What specific imagine you're going to a doctor, right? Imagine you're going to a doctor, and a doctor is gonna do a blood test, right? He checks your blood pressure, do a blood test. You can see what's your liver enzyme, your cholesterol level, all these different readings, right? You got all these different readings that talk about your health, right? It's the same thing with any country, right? To measure the health of any country, right? You're going to look at stuff. You're going to look at stuff like you're going to look at like the jobs report. How many people are employed. We're going to look at wage data. Yeah, we're going to look at wage data over here, right? What else we're going to look at? We're going to look at manufacturing data, right? Manufacturing, right? I'm sorry, I'm so sorry. My handwriting is freaking terrible, right? We've got manufacturing there, right? And broader data like GDP, right? We're going to look at GDP. We're going to look at inflation, right? And all of it really, all of it affects this thing called economic data, right? So when the economic data is good, right? A stronger US economy, right? So strong US economy, that means you have more jobs, right? You got higher wages, you got less unemployment, right? And there's manufacturing expansion, right? Your GDP, is growing up, usually more than at least 2%, right? All these things are good for the US economy. And if it's good for the US economy, it tends to cause gold prices to drop. Okay. Yes, so Ajay, I'm going to talk to you I'm going to share a bit about how the Fed interest rate, which is the talk of the town, right? How the Fed interest rate actually affects the prices of gold. We can take a guess over there, okay? Yeah, we'll take a guess over there. Now, the next thing, of course, so one of the key things that cause gold prices to go up? One of the key things that cause gold prices to go up is really, in this case, right, it is the economic uncertainty. Economic uncertainty causes gold prices to go up. Why does that happen? All right, why does that happen? Right, if you think about it, before there was even what we call fiat currency, right? Before there was the US dollar, right? People transacted in the form of gold. You literally go to a barber and it's like, here's some gold, right? Cut my hair, right? Of course, the problem with gold is that small little gold coins here and there, but it's not that easy to have change, right? And it's like, hey, I want to buy this Subway, right? I mean, this was really long time ago before Subway even existed. You know, buy Subway, and you have a gold bar there. You can't like shave off. Imagine trying to shave off like bits of pieces of the gold, right? Just so that you can buy a Subway sandwich, right? But it's before currency, there was gold, right? So gold by itself there's a limited quantity of gold in the world. Just the very fact that there's a limited quantity of it, right? It means that the supply is limited. So you can't, unlike money, unlike the US dollar, for example, you can't print gold. It'd be great if you could print gold, right? It's like how the US was just printing money when during the like the economic crisis, just print money. Bitcoin, for example, is great. So that's why Bitcoin, they compare Bitcoin to like digital gold, because the concept of having a limited amount of quantity puts a limit on the supply. The very fact they put a limit on the supply, right? You have a limited supply, so the more demand it has, the higher the price goes up, right? People will not have to worry that when the time comes, there won't be this guy Midas, right? Comes and touch everything and it turns into gold. No one can actually print gold. There's a limited number of gold in the world, right? And that's why it is something with so much value, right? And if the world collapses, what has value, right? If we get blasted back into the olden days, right? The whole economic system collapses and stuff, right? We're going to find ourselves trading with gold once again, because let's just say the US, it's a long shot, but yeah, say the US, the financial system collapses, right? People don't trust the USD anymore, and that happens in certain countries, right? I think there are some countries where, because of the inflation, how fast a currency like becomes, you get your paycheck on one day, and next day that pay is worth nothing, right? It's that exists, right? And people say that, hey, we want something more stable, maybe use the US dollar, right? So that's why a lot of countries use the US dollar. But if the US dollar didn't exist, they might just say, let's use gold, small little gold coins instead. There'll be a safer value, because the gold is gold, people bite it. You always see people biting gold, right? It's like, hey, this is real stuff, right? So in economic uncertainty, right, the more uncertain the economy is, people tend to flock to this safe haven called gold. Fabio, I never knew that, right? Now safe haven. You can question for later, please. What is okay? Well, I have no war cycle research. I'm not sure about the war cycle research. It's interesting though. I might just take a look at it. Right now, guys. Let's go to the next point. Sorry. Let's talk about the Fed. Right. This is a good gauge for me to see what you guys think. How does the Fed increasing interest rate affect the markets, especially affect the gold, right? Can anyone try to piece it together for me? I like to see the different interpretations of it, because in between, from what the Fed does to how it affects gold prices, there are a lot of things that happens, a lot of interconnected parts, right? So I mean, Isaac asked $1 million question: when is the global recession going to end, right? Anyone want to take a shot at this, right? If Charles has a good point. Increases the cost of carry, increasing the opportunity cost of gold does not increasing the opportunity cost as gold does not pay interest. I see that you did a reading on you understand the whole concept of opportunity cost. Martin is saying that higher interest rate means higher demand for the dollar, means gold drops, right? We got Fabio saying the more interest rate goes up, more traders leave gold to buy dollars, right? Zabar is saying interest rate rise, hopefully protect from recession, then gold increases, gold value will not rise. Imad, high interest rate, less money for people. Less money for people and companies, less printing USD increase in value, right? If the Fed, Graham saying, if the Fed increase interest rate, that strengthens the US dollar, which would decrease the value of gold. Some loose relationship there, not wrong, not yes, on the right path. With interest rate, KK is saying with interest rate increasing, the money flow decreases in USD, and the gold you can buy is more with less money. Okay, increasing cost of loans, so manufacturing slows down. So manufacturing, good point, because manufacturing actually uses a lot of gold, right? So if you use a lot of gold, manufacturing slows down, right? Because gold as itself is actually used for a lot of manufacturing stuff. So I think Terhemba, right, was one of only guys who mentioned stuff like manufacturing. What happens when manufacturing slows down, right? It slows down and the demand for gold drops. Demand for gold drops, right? Price of gold drops. That is one correlation that is worth taking note of, right? Ajay say USD increase. Desiree saying if interest rates go up, gold is supposed to go down. But if there is inflation, then shouldn't gold go up? Because gold is supposed to hedge inflation. Now, the interesting thing is, right, a lot of research shows that gold does not necessarily have a strong correlation with inflation. And let's we all know that we live in a time of crazy inflation, right? I think the US recently reported that their inflation numbers were 8.6%. Let's So what I like about this session is that I like to get you guys thinking, right? Because that's where the learning happens, right? What do you think is one of the biggest causes of inflation? What is one of the major contributors to inflation currently? What do you think it is? Nikesh is saying higher interest rate leads to diversion of investment avenues, hence gold being the safe haven and vice versa. Right, we got Fabio and Simon saying oil, we got John saying wages, printing money at the rate when gold reserve is not available, high supply of money, print money, right? Excess money supply from quantitative easing and ultra low interest rates, off balance, war. War is a indirect, but cash subsidies during the pandemic, high employment. Okay, quite a number of answers there. Now, if you think about it, the Fed, right? What can the Fed do to fight inflation? The only thing that they can really do is they can increase interest rate, or they can decrease interest rate. But in this case, they increase interest rates, right? Graham is saying shortage of key commodities such as oil, right? Okay, so the reason why we're seeing one of the craziest inflation in recent times is because there are two things that is causing inflation. And one of the big things is actually oil, right? So we know that there's a war, Russia and Ukraine war, right? It's kind of pushing up the prices of oil, right? And when they push up the prices of oil, what happens? Oil is used for literally every single thing in the world, right? Oil is used for almost everything, right? And the price of oil increase, what happens? Supply chains are affected. Suddenly, that shipment from one country to another country is like, whoa, that is expensive. Last time at the cheaper prices of oil, it made sense, but now it doesn't make sense. I need to hold back on it, right? Or maybe I need to load more stuff. I cannot ship that thing on the with 20% capacity. I need like 100% capacity, then it makes sense. Like freight increases, that's exactly correct, Mary Rose, right? Kerban, I will check. I'll take a look at it, right? Maybe ping me on the intercom at the bottom corner, right? And we'll chat. No, gold and oil is not directly proportional, right? So this is the oil, right? Causes like shipments, the price of shipments to increase, and of course, when these freights, right, have to increase the cost, imagine what they're going to do. They're going to pass on the cost to the consumer. So previously, I'm in Singapore. Maybe I want to ship something from the US to Singapore. Maybe it costs like $10. Now it suddenly costs $20, right? Because it's just more expensive, right? So the cost is just passed on everywhere, right? So the cost of literally everything starts to be more expensive. The cost of goods, right? Cost of living all starts to go up, right? And that pushes inflation. That causes, broadly inflation to go up, because inflation is basically, like CPI, consumer price index, it's a measure of the price of goods. So previously, I'm buying this can of drink, right? This herbal drink, it might be 50 cents. Now it's $1 because of everything that took for it to come to here. suddenly it costs more expensive. That's why we say inflation. Inflation, prices have gone up. The cost of a good, cost of what I'm holding suddenly is more expensive, right? So oil was a big part to play in that. Now, so that is one of the reasons, right? That is one of the reasons why there's such high inflation, right? Yeah, logistics is doing great business now. So, freight prices and good, yes, Fabio, that is correct, to a certain degree, depending on what the good is, okay? Now, so firstly, inflation is, oil prices is high, but how in the world can let's think about it. Can the Fed reduce the price of oil? What do you guys think? Can the Fed reduce the price of oil? Fabio is saying yes. I would like to see. Lucas also saying yes. What do you think? If you say yes, tell me how. Tell me how. Imad is saying we got Joe Biden visiting Saudi Arabia for possible increase in oil production, cutting taxes, cutting oil taxes, possibly indirectly through slowing the economy, but not directly. Yes, by increasing interest rate, not really by interest rate, not the Fed, but US indirectly releases more oil supply in the reserves to meet the demand. Good point by Desiree. Oil is a raw material, so as Fed decides interest rate can affect the supply and demand of oil. Only OPEC can decide by SAT, right? Unless there's influence over OPEC. So the general consensus is that it's not that clear cut whether the Fed can really affect the price of oil. So in an ideal world, they'll be like, yeah, man, if oil is one of the major contributors to inflation, we want to reduce the cost of oil. But you know, and I know that oil prices is not that easy to reduce the prices of oil, right? There are a lot of major powers at play controlling the prices of oil, right? So that is the thing, right? So the Fed cannot decrease the price of oil, so they cannot cause inflation to decrease, right? So what do? The next best thing that they have up their weapon, up their arsenal, up their sleeve, is that they can increase the interest rate. They can play around with the interest rate, because when the interest rate goes up, cost of borrowing money goes up, right? So previously, is like many of these big tech firms out there, right? Many of these big tech firms out there, right? They borrowing is so cheap during the time where there's the whole COVID pandemic, right? They needed to spur the economy. That's why they really cut the interest rate by so much. And imagine, borrowing was so cheap. They can borrow so much money, and a lot of these high growth stocks just borrow and borrow and borrow and just spend, right? So, but when the interest rate goes up, suddenly they're like, oh man, this is starting to be expensive, right? It's a little bit expensive, right? And then they cut back a bit. But more than that, right? When the cost of borrowing goes up, the cost of goods go up, right? So suddenly things start to look more expensive around you, right? Imagine this bakery, right? I'm a bakery. I run a bakery, right? I obviously need to loan money to run my business, right? Suddenly the interest rate goes up, the money which I'm borrowing goes up. I need to pass on the cost to my consumer. That little piece of bread that you have, right, or drink, suddenly the prices go up a bit. The cost of goods go up. What do people do? Spending decreases. Now, when spending decreases, what happens? Yeah, spending decreases, that starts to spur recessionary fears. People start worrying about this recession, and we think about it, right? That is one of the big reasons, right? Where we think about it, we're in a technical recession, right? The S&P dropping 20% from its peak, right? A little bit of recession, and what is supposed to go up? Gold is supposed to go up. Okay, gold is supposed to go up. So, but then again, did gold really go up or not, right? That'll be another question. We should be looking at the charts later to put it more into a little bit of technical analysis with our fundamental analysis, right? So it's very interesting. You think about it, right? It's not as clear cut on, for example, on how to reduce inflation is one thing, right? The Fed has a couple of things that they can use, but it's not as clear cut. And what affects the gold prices is very different because that's where inflation and gold prices don't have that strong a relationship. It might have, right? It might have if the main cause of inflation, was not because of oil, right? So oil kind of, in this case, right, is one of those people in the tug of war that's pulling it in the other direction, right? Okay. All right. What does boxing mean, right? If you mean boxing means that maybe I can look at the charts. Yes, I'll look at the chart soon, right? So that is that's the thing that we need to focus on, right? So many things that affect gold, but I want to show you some ways that some things to take note of, right? Some things to take note of from a technical perspective, right? Because I can see a couple of you guys saying that, what about if we're trading it? How do I put it into action, right? And you know my forte is in technical analysis, so let's jump into this, right? Gold over here, Now, so one thing I like to do, shucks. Okay, I'm just going to go over here. Maybe I can hide some stuff over here. You know, I don't know how to hide it. Hey, never mind. So there's this function that you can do, dollar index, DXY. You can put it on the new price scale. What you will notice with DXY is that there's a little bit of a negative correlation with it, right? Now let me show you what I mean, right? So with gold prices going up, right? Oil prices, no, dollar index, the dollar is going down, dollar goes up, right? Gold goes down, right? It's not as clear cut of a relationship, right? It's not as clear cut as a relationship, but this sometimes is the best that we have. This sometimes is the best that we have when it comes down up, right? This is up down, right? When it comes to looking for a negative correlation, look at this drop and then shot up, you know, up then drop down. It's not a super duper clear negative correlation, but it is one of the things that we can look at. Marugesh is asking if gold and oil is positively correlated, and we can take a look at it. Fabio is asking, we look points to sell gold when Fed is hawk. When Fed is hawkish, what are the points to sell gold? For example, what the Fed is doing now, right, wanting to increase interest rates, technically is going to cause, let's talk about like what's my personal view on it. Technically, right, the economy is going to get hit more and more and more. Look at the US economy, right? Let me just throw it up over here. It's going to be a little bit a S&P 500. I'm going to hide this thing over here. Look at this. Look at this free fall on the S&P 500. Okay, it is dropping hard, right? Because it's dropped by such a big amount, we are in a technical recession. Joanna, the blue line was the dollar index, right? Now look at over here. So we're in a little bit of we're being hit hard, right? Because a lot of you think about it, if you look at the news, right? Coinbase, right? Many of these big firms, right, are cutting back on their spending, right? You just look at something like Netflix, right? Netflix, on the big movers, bam, look at it. That is a fall from 700 to 170, right? We got Meta. You just look at Meta. Look at many of these platforms. They're being hit really hard, right? Give me another big player, right? I don't think Google is hit that hard. Google should be still, it's still being hit, not as hard as others, but yeah, you know. Let's look at Apple, right? Okay, AAPL. We can throw a couple of charts here. All of them are being hit pretty hard, right? So Apple lost from 180 to this is almost like 20-30%. Tesla, I think, is affected less, but is also being hit hard. You can see, right? Almost half its value, right? If it's almost 1,000 to 600 over here. A lot of these companies are being hit very hard, and the Fed is going to continue to increase interest rate. If you look at the, I think there's this thing called the Fed rate dot plot, right? The dot plot actually shows you how they I'm not sure which is the most recent one, right? But shows you what the interest rates that they intend to increase over time. Is this, I don't know which one is the latest one. Um, but yeah, we basically, we should be expecting, we wanted 2022 to be what now? 2022 is about 1.5% already. It's going to be increasing, right? I think the next one in July, they expect to increase the interest rate a little bit more. And if they do increase the interest rate more stuff is going to get hit, right? The stock market is going to get hit harder, right? The entire US economy is going to drop, right? So if we were looking at this thing over here, right? If a strong US economy causes prices of gold to go down, the opposite is true. A weak US economy will cause the prices of gold to essentially rise, right? Yeah. So because we're going to think about time, we're going to look at the markets and say a lot of uncertainty there, right? Maybe it's time to jump in on people have that recessionary fear, they are worried about it, right? And that's where they start um, jumping into gold. So just looking at that as it is, right? So we technically should be bullish on gold. Long-term view, we should be bullish on gold. Now, look at stuff like here, right? The moment I what I talk about, what I mean by economic uncertainty, right? Stuff like here, right? This moment here was when the Fed when Russia, when the coronavirus occurred, right? And it just, the amount of uncertainty pushed prices up, right? Because a lot of the markets are closing, the stock market is dropping, the gold prices went up. Now we're in a time where I believe my long-term view on gold is that from a fundamental perspective, you should be looking to buy on weakness, right? That means you should be looking to get in as cheap as you can, right? Okay, got a lot of questions coming in. Just let me check. Louis is asking, has market pricing the announced coming interest rate? Yes, it has. It always does, right? That's why we need to be good with our technicals to be able to trade it properly. Yeah, maybe Fabio. Will you possibly share your screen, please? Cree is asking me to share my screen. I believe I am sharing my screen, unless you've been spending the past 1 hour just looking at me. There is a toggle where you can look at the screen and look at me, right? So do check it out, right? I don't blame you if you just have been looking at me for the past 50 minutes, right? I must have been pretty entertaining for you not to look at the charts. Okay. I was back again. All right. Okay. Simon. Okay. Tesla. Right. So now look at this, right? So a consideration for correlation is that I'm going to double click on this. I have two charts here. At the bottom chart, I have the dollar index. At the top chart, I have gold. Now they are, although you don't really see it, they are actually inversely correlated. One is going up over here, one has been going down. So if you look at gold, I'll show you what might be my view on gold, right? Is that on the short term, amazingly, you're expecting we are in a little bit of a bearish channel. Okay. How do we improve the chances of us having a correct analysis, right? We then look at the equivalent on euro dollar. I mean dollar index. Okay, dollar index is slightly bullish, gold is bearish. Okay, so these are the levels they need to take a look at. Does US bond influence the gold price? I think it yes. The interest rates, the US bonds are affected by the interest rates, which also affects gold. So technically there is a relationship there, Mohit, if that's what you're asking, right? Luca, sure, what is your question, Luca? Right. So wait, let me just, as you type that question, let me show you what I'm thinking about for gold, right? So we need to improve the odds of you getting a setup correct, right? You need to do a little bit of correlations, right? So you're not only looking at like maybe in this case, you're not only looking for at the gold chart, you need to correlate it with the dollar index chart to give yourself a clearer view, right? So over here, right, I'm going to try the Ichimoku cloud, right? Sadly, there's a little bit of bearishness on gold. The only time I'm looking to play a breakout, so what I'm looking for is if gold makes a breakout on this, right, then the dollar index, should be making a bearish breakout. So that will give me not only one confirmation, but two confirmations that we might be seeing gold continue to rise, right? So that is one of the ways. I've been looking for a lot of different ways to find correlations for gold, but it is hard to find anything that is correlated with gold, right? I think we had a like 10-year bond, US 10-year government bond. We can actually look at this also and see how it looks like. Of course, it's slightly different from price. It does look not bad actually, the inverse correlation. Where you should put the take profit investor open a position on gold feature looking from this graph. Okay, Luca, I'll answer you in a bit. Yes, Charles. So there are periods where gold is correlated and periods where they're not that correlated. That's the thing that you need to take note of, right? But interestingly, right, the bond prices seem to be pretty negatively correlated with gold, right? So actually a very good point by Marugesh, right? It's a pretty good point by Marugesh. Let, let me just yeah, there we go. It's pretty negatively correlated. So it kind of or maybe I should put it on the same pane, right? That's a good point. On the same pane, I can see that again. It guess kind of moves in opposite directions of each other, right? So yeah, it does look like you have a pretty negative correlation with bond prices. So it's a good point that you raised there, Muhit. Sorry, Muhit. All right. Um, so Fabio's asking, so we need to look DXY, S&P, and Fed direction. Yes. So Fabio, if I were going to look at this, right? So the time frame firstly that I'm looking on is usually the weekly and the daily. All right. Now I'm expecting for the rest of the year, right, the Fed to continuously increase interest rates, right? As it increases interest rates, right, what's going to happen to gold, right? Gold is going to likely go up because the stock market get hit more and more and more and more and more, right? And sorry, just let me erase this thing over here. Yeah, as it gets hit more and more, right, there's more recessionary fears. And what we talk about, economic uncertainty, the more that feels like there is economic uncertainty, right, the more the prices of gold will continue to rise. So we have that big underlying support, right, that this year, 2022, is not going to be that smooth sailing for a lot of the stock market, which a lot of the Americans are invested in, right? A lot of jobs are being cut, right? You've seen the jobs report. Just search for stuff like Coinbase job cuts, right? Rule out further job cuts. Showing 1,001 jobs. A lot of job cuts are around is everywhere, right? So a lot of job cuts happening, right? A lot of economic uncertainty, recessionary fears. Gold prices continue to inch up a bit. So fundamental perspective, from a fundamental point of view, right, we have that little bit of support at the bottom, expecting prices to go up. The key thing from a technical point of view is to decide what level can we get in on to trade gold. The problem with this is that it's absolute trash. This movement here is like crap. Like, how do I look at this and how do I even trade it? It's quite hard, okay? But honestly speaking, it is tough to look at this chart and figure out where the hell is gold gonna go. Okay, some things that I can immediately see for gold, right, is that yes, there is that little bit of support over here, right? You can see that it is kind of like bouncing higher and higher and higher and higher and higher and higher. Okay, so it's a little bit of like it's continuing to rise a little bit, right? You throw up the Ichimoku cloud, it is testing that little bit of support, but it's pretty weak. So I would consider it as like a decent time to kind of long term to try to play a move in, right? Scale into gold and try to slowly. Every time it kind of dips down a bit, you buy, right? It dips down a bit, you kind of buy, right? So as it dips down in different areas, then you look to get in to kind of play the move up, right? Of course, this is different from our trading live market analysis session tomorrow, where we look at more actionable stuff, right? This is more of like a long-term positional trade. So remember, the word is um, time sensitivity to technical analysis correlation table, right? So if you're a scalper, right? So you're a scalper, you're a day trader, or you're a swing trader, right? Or you are a positional trader. So if you're a positional trader, your reliance on fundamental analysis is super duper high, right? But if you're a scalper, your reliance on fundamental analysis is super duper low, right? So in this case, right, if you're taking a long-term position on gold to play it up, right, you're relying very, very minimally on technical analysis and relying more on fundamentals and the bigger view or understanding of the economy to take a long-term trade. Okay, Darius is asking, is it better buy physical gold? Not necessarily true, right? Not necessarily true. Maybe gold futures is not bad because you don't have any holding costs, if I'm not wrong, right? But the problem of buying physical gold is that, yeah, you know, it it is you cannot exercise that much leverage, right? Although it's nice to hold. Fabio is asking, we're talking about yes, we can counter trade scalping, right? So Fabio, that's exactly correct. Um, um, yeah, that's exactly correct. So this is a long-term positional trade that we have on gold, right? Talking about like what we expect from maybe until the end of the year, right? But in the interim, right, like what I do on a day-to-day basis, I jump into the charts, right? I just look at of course, we look at the equivalent XAU USD, which is like on, I think we call a move here. Oh, it's pretty nice, right? So yeah, we jump into that. I will do my Fibonacci. I'll do my support and resistance. I'll try to trade the in-between movements, right? But what we're talking about here is mainly the long-term view on it, okay? Now I got question from Alpha, right? In terms of correlations, right? Look at the negative correlation is the 10-year bond treasury yield with gold, and negative correlation is also the dollar index DXY alpha. Okay, Luis, if the market such as S&P have already priced in the coming interest rate increases by the Fed, can it be that we have reached the bottom, close to the bottom, and that it might be soon a good time to buy the dip? Well, technically, yes, Luis, right? Luis is saying that, you know, if it's already priced in, right, is it a good time to buy the dip, right? But we also need to, some of the things that move slightly slower than the Fed is, of course, the job cuts, right? How the economy reacts, right? The economy always reacts slightly slower, right? The markets react super fast, right? The moment the Feds adjust the interest rate, the markets move fast. But if you want to let someone go, right? If Tesla wants to fire 100 or maybe 1,000 employees, they cannot just do it like that, like the market. There's a whole process that needs to go. Then maybe like 1 month later, 2 months later, bam, you know, you suddenly see job cuts everywhere, you know, hiring freezes, right? You know, unemployment has increased. Then the market starts to catch up a bit and say, whoa, 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 non-farm payroll result on Friday, massive unemployment. What do? We start to panic, recessionary fears, right? Gold start to go up, right? So the market always reacts slightly slower, right? So that is where like the time sensitivity, the elasticity, right, is not as, it doesn't react right away, right? The market knows, right? But how the companies react to it, right? After all, these are people with, they might be able to find a way out of it, but it looks like most of the companies are being like hit really hard enough that we're seeing the S&P continue to drop, and I believe it'll continue to drop even further, right? And when that happens, right, there'll be additional buying opportunities for gold, right? So Yamino, technically, yes, long term, if you're holding, I believe, you know, gold is in the right place to kind of buy, right? But of course, this is just it's not a trading recommendation, okay? Yes, I'll be uploading this webinar to IC Markets. Okay, Luis, I'm glad you found the explanation useful. All right, guys, you know what? Yeah, it's been great, right? It's been great sharing with you guys this session. I do want to point you to one thing, which is tomorrow, our awesome session, right? It is likely to be me or Cass, our live market analysis, right? Our live market analysis is, we'll ensure that it is scheduled, right? I think it's tomorrow's one is not scheduled yet, but do check it out, right? We have a live market analysis where you can jump on and you can join us in real time as we analyze the markets together. Um, Quarren Kurban is asking, is gold a buy for scalper now? Hard to say. I need to look at the markets and we look at it together, okay? Please send cash. Why, Samuel? Do you not want to see me? Arkibong is saying, let it be me. All right. At least I got some supporters here. Why do you guys want to see Cass that much? It's always going to be rotating between me and her, right? Tomorrow it might be me, right? Angela, I'm glad you found this as a great first session, right? Yeah, yes, yeah. Mohit, thank you. I'm glad you like it too. Ciao, Diane, right? It was a great session. I'll see you guys in the VIP room, right? We can continue our conversations there, right? I'll see you guys tomorrow. Thank you for tuning in without fail every week, Joanna. Really appreciate it, right? Thank you, Ajay. Thank you, Mary Rose, right? Julian, Bob, Samuel, right? Where is Peter? I hope you found today's session useful too, Peter. Okay, Lillian, Jack, Edmund, Yamilo. Thank you very much, guys. If you can drop IC Markets chat a message saying that you enjoyed the webinar today. It'll probably help me a bit. Kidding. All right. Thank you very much, guys. Yeah, a lot to think about gold. I hope you found today's session useful. I'll catch you guys. Yep, I'll enjoy my kid. Thank you very much. Right. Thank you, Graham. I'll catch you guys again tomorrow. Stay safe, guys. Stay safe, guys. Trade safe, and I'll catch you guys tomorrow, or you might catch Cass tomorrow or the week after. Thank you, Carbon. Right. Thank you very much. Adios, guys. Peace out. Peace out. Bye bye.